Hello everyone, welcome to my channel again. So today I was trying to make a mortgage calculator. Of course there's a lot of mortgage calculator available online, but I was trying to see um, to make a custom one. The main reason for this one to understand how much a mortgage cost and how I can make a difference in the cost. So in simple way, I can have a specific amount of capital that I took as a mortgage, and then I will of course have some interest rate. What happens if I continue paying as the bank wants me to pay? How many years it can take, and what is the the total cost of the mortgage, which is actually the interest paid at the end of the mortgage period. One way of making a difference in the cost is of course if you can make some overpayments, but in that case sometimes it's not clear to us how much we can make overpayment and what is the difference it's making. So in simple, the idea of this mortgage calculator is to see how my overpayments amount can make difference in the interest paid. And of course the years will be different as well. So if I don't make any overpayment, what will be happen, and if we make some, and of course eventually if we change the amount of overpayment, what's happening. And thus I think it will help us to go for it. It's of course an kind of support we can get from this calculation. So let's get started. I just created a simple calculator using Python, but the basic idea is the same. So let's get started. So let's start with an amount. So let's say 200,000 is the amount we are taking as a loan. Let's say the interest rate is 2.5%. We are not making any overpayment, and of course bank want us to they will fix depending on the years we are eligible for. Bank will fix installment, and then they can calculate the years. So let me take from here and see what's happening. I'm going back to the code I have been writing. So the loan amount is 200,000 and the interest rate is 2.5%. Installment, let's say 800, standard one, and then as you can see that we are not paying any extra. So our monthly payment is the installment only. We are not paying any extra. It's zero now. What happens at the end of, because we want to see unless the loan amount went to zero, I mean unless all the mortgage payment is completed, we want to continue and see this should print our years. So let me run this one. So let me just run. So as you can see that I have also creating a text file just to print those things, how many months we are doing, pay date and all those things. Also printing some of the information here. So we can see that it took around 30 years. If we go back to the document here, so this is I just printed. So you can see we started from paying 800 a month, but the next month it will be double, and this is the capital amount we are paying. And then you can see the interest. If we calculate 2.5%, the interest we are paying is 416 for the first month, and the capital only 383. So as you can see, when you take a mortgage loan, when we are paying the complete installment, actually we are paying the interest. We are not near to the principal. So as you can see, we took 200,000, but after a month when you even pay 800, it is still kind of 1,099.61. So a lot of the money is going into the interest. And as you can see that in the beginning, some of the years actually we are just paying the interest. We are not touching the principal too much. So I'm also calculating the monthly amount we are paying here, and then extra pay. As you can see, this is zero for now. So what's happening? It will continue until 354, which is 30 years, of course. 29.08 is about, so you are paying about 30 years, and what we are paying in total, so 283,200, whatever you need, currency you can imagine, pound, dollar, whatever, let's say dollar. So you are paying 283,200 dollars, and of course you are paying 200,000, that is the money we borrowed, but you are paying 82,805 an extra amount. So let me put in our, so let's say 29.5 years, and we are paying extra 82,000, it was 805, I guess. So now we can see that when we take a mortgage for 200,000 US dollar at the rate of 2.5%, over 29 years, we are paying extra 82,000, almost $83,000. So the cost of the mortgage is 82,000. So that's how banks makes money. It's nothing wrong with them. That's fine. But of course, we want to take control of our financial situations, and we want to make a difference. Now, our goal is to see how much money I can pay as the overpayment and how it influence or affect my years and the cost of the mortgage. So let me save this one. Let me go back to our, let's say, of course I still have the same amount, and then the interest rate is same. Now let's say we want to make $100 extra each month. What happens now? That is what I was really interested to know. That makes me making these calculations. So what happens now? Let me go back to our calculator and delete this one. So what we want to do now, we want to make 100 extra. That's it. We are not making any difference. But now, of course, our installment will be added, the extra will be added to the monthly payment, which will be the 900, of course. So what happens if I can pay $100 extra? Is it a big difference? Is it a small difference? I mean, what it is. Let me just run it again. So wow, you can see it's 24 years now. So if we go back to our mortgage illustration, that's now 299 years, which will be around 24 years, you can see here. So let me go back to our, it will be 24 years. So you already saved like 5 years. So let me put save 5 years. We already saved 5 years. And how much cost we are saving here? Let me go back to our calculator. So now we are of course paying the 200,000, that's fine, but now we are paying only 68,849. Let me go back. 68,849. How much money we are saving? It should be around 15,000, I can say 14. Yeah, let me stick on 14,000. So we are almost saving 14,000. We are saving 40K. So now it's easy for us to understand. Oh yes, if I can can save $100, less coffee probably in a month or whatever it is, no chocolates, or I can miss a outing, but then I can get out of this bank 5 years before than I supposed to be. So as we can see, a simple $100 make a huge difference in our freedom, financial freedom. So it can save us from this mortgage 5 years before. Not only that, it also save us $14,000. Now let's get crazy and let me make a bit more. So let's say initially we plan to pay 800. So we are talking about 100. What about 200? If I can make 200 extra every month, what's happened there? Let's run it again. Wow, it's only 21 years now. So let we check this one now. Let me go back to our illustration documentation. It's now 260 months. This is months, of course, 259 months, which is around 21 years. So let me update. Of course, the amount is still same, 2.5%, and then we are paying 200 now. We are finishing in 21 years, and then we are saving 8.5 years. We are saving 8.5 years, and how much money we are saving there? Now we are paying extra 58,987. 58,987. So how much we are saving here? So let's say 59, then 10, 23 or 22. Doesn't really matter. Let me just put a number on it. So if we can put extra 200 every month, we are actually saving 8.5 years. We are getting out of this loan 8.5 years before, and we are saving around 22,000. We are not paying this extra money to the bank. Okay, shall we go more crazy? Let me see if someone is capable of paying double. So let's initially it was 800. Let's put 500 extra. I wouldn't imagine that people would, it makes sense paying complete double. So let me stick on 500 then. Now what happens? Let me go back to our calculator and let's put 500 extra. Close this one. 500 extra. Let's run it again. Wow, you see, in 15 years you are out of your. So initially, excuse me. It was 20.9, but 30 years, and now you are, finishing your mortgage in 15 years now. If you can pay 500 extra. And what is the cost then? Let me go back to 187 month. We can see it's kind of, you are paying extra 41,375. So let you go back there. We are done in 15 years. We are saving almost 15 years, I would say. We are saving 15 years. And we are paying 43,000, what was that? 375. So how much we are saving now? So it's also 50%. We are saving 50%. That's for sure. We are saving 50% now. So what we are getting here? So as you can see that if we get ourselves into the bank's trap, I wouldn't say it's a trap, but of course this is how bank is doing the business. But of course I think we really need to think of financial freedom, and then how we can make a difference in our financial situations, and what is the ability. Of course all those things that depends on the ability in our monthly payments and incomes, all those things. But I think this is already a good example of showing us that a very small amount, if we can save and put into our mortgage, and it has a very huge difference. So we can see that from 82,000 a mortgage cost, we can complete our mortgage half of the time, like in 15 years, and we pay from 82,000 we can bring it back to the 43,000. It's not exactly 50%, but it's, I would say, 49% we can see. So this is how it works. Now, so far so good. We have seen this kind of calculation, and we can see that it has a huge difference. But now let's go back to some of the complexity in it. So what is the complexity? So the one complexity, depending on which country you are from, which bank you are working with, different lenders have different policy with the mortgage. So the one thing is of course coming into account is sometimes the bank doesn't allow you to overpay above a specific amount. So what I mean is like that, for example, some banks say that, hey, you can pay maximum 10% of your remaining loan. So some bank will say that, hey, you can pay maximum 10%. So in the first month, in the first year, so when you have 200,000, so 10% is 20,000. So the remaining loan is 20K. So you can pay maximum 20K in first year. So, and second year, what happening? In the second year, let's say you have to calculate 10% of remaining loan. So probably you have 170 left, then you can pay 17,000. So this is the way it works. So let me calculate this as well, because we don't want to go out of this maximum 10%. Some banks has the policy that yes, you can pay more than 10%, but then you need to pay and charge for it. So now the challenge is how we can keep the track of this 10%, but we don't want to make any extra charge of it. In simple word, we want to pay as much as possible, but of course we want to beyond the, we don't want to go beyond this 10%. So for this one, what I did in the calculations, so you can see that I was commenting out this one. So you see, when we have an extra payment, if you go back to our last one, you see, you already can see that. So you see the extra pay, we are paying 500, that's fine. We are paying 500. But then you can see suddenly our extra payment went down 431. You see in after I would say 10 years or 12 years, you see that you are not paying 500 extra anymore. From month 145, you are paying actually 431 instead. And then even after month 157, you are paying actually 311. And then you are paying 187, and then you are paying only 61 extra. This is because we want to keep ourselves on that 10% as an example. Of course, you can change this amount depending on your mortgage lender's policy, but my calculation is not taking you out of that 10%. So you see, when we are doing this new extra, so in every 12 months, that is 1 year, what I am doing here, every 12 months, I am calculating what is the loan amount left and what is the 10% of it. And if that loan is 10% extra is more than the initial extra you made here, which was 500, then we will go to the extra. We will change this one. That's what's happening here. So when you see that, okay, this 500, but I am able to pay only 431, so let me pay 431 instead, no more 500. So I hope you understand what I'm doing here. So this is the reason I'm calculating the bank policy. So you can call a bank policy. So let it comment is bank policy to pay maximum 10%. So as you can see that in these calculations, we finished our loan in half of the time, 15%, but we are not paying a single penny as a charge, because we always calculating hours, how much we should pay. So this is where it's helping us. So we should look into these calculators, and when it is coming to the month 145, you should change your payment into 431, not 500, because if you pay 500, probably bank will charge you $50 or something as because you are got out bound of the boundary. So this is the calculation will tell you which month and how much amount you should pay as an overpayment. Of course, you are setting the 500 in the beginning, but of course you have also the track of how much you can pay. So this is one thing. So we are still in good shape for this payment. We are not paying any extra amount here. The second thing, probably helps some people to understand better is like, so what's happening most of the, when we take a mortgage, there is different policies, like you can take a 5-year fixed, 2-year fixed, 10-year fixed, and then after that fixed period the interest rate can be changed, and then your installments can be changed. So we also have that option as well. So let's say we take a loan which has 5 years. So this is for 5 years. 5 years. After this 5 years fixed period, what's happening? They say now you have to pay 3% after 5 years. So what's happening there then? And what will be your probably they are saying that your installment will be not the extra, but the installment will be now 900 or 850, let's say, or 900, let's say 900. So it's not 800 anymore. So we can put it into our calculator as well. So we started at 800, we're paying extra 500, but when it's more than 60, so that is the 60 divided by 12, that is 5 years, your interest rate will be changed to 3%. So inside our calculator we are checking if we are going out of this 5 years, and then your monthly payment you see, so you can put 900 there, and the extra amount of course you are paying. So it's not after 5 years your interest rate is changing, and of course your monthly payment is changing as well. So what happens now? Let me do a calculation. So now see, you are still in the 15 years period, and we can see how much we are paying extra. We can see that it's 44,491, which is quite aligned with our the payment here. So it will be 44,000 then, simply because of course the interest rate is changing, so you are paying more interest now, and then you will be paying more. So as you can see, this is a simple calculator, but we are considering two factors here. One is a fixed mortgage term, so it can be different. It can be 2 years for you, or 8 years, or 10 years, or whatever it is, and you can put the interest rate there, and you can put the installment. That actually bank will tell you what will be these two amount after 5 years in the contract when you are making this contract. So you can change this one. But what we have in our control is the overpayment. And to track that, and you can also able to change this one. So think about, if it's 10%, you cannot pay, or 15%, 20%, then depending on that you should change these. Of course you are capable of doing this here, the new extra, so probably you will be taking is 10% or 20%. If you are capable of paying more than 20%, less than 20%, you will change the amount here. So I'm taking an 10% as an example. So that's it basically. So this calculator actually helped me to understand how much money I should pay as an extra, and where, the most importantly, in specifically which month I should keep track on my overpayment so that I'm not paying any extra. So for example, I know now that when it will be month, let's say this one, month 145, I will go down to 387, and when it's month 157, I'll go down to the 268 extra. So I'll be adding 900 plus and this amount. I will not pay 500 anymore. So this is basically it. It helps getting inside our mortgage policy, at the same time give us more clear picture of how much we can actually decide how much we are going to pay to the bank. So this is not what banking deciding. Bank is deciding just as an doing the business with you, but then you need to decide by yourself how much you can pay as an extra and how much you can save, and what is your boundary in which month how you should change this one. So I hope this will help you guys I will probably upload this code in GitLab if anyone interested to get this one, so that's fine. Hope this helps you guys. Thank you very much for your time. Have a great day. Bye. Take care. Bye.